Hello everyone, Joshua Hayes at BigWaveTrading.com. I hope you're having a wonderful Thanksgiving holiday weekend. Half day session on Friday. Market was open, so I was open. I do have one new long position, but the main focus of this video lesson is going to be reviewing the market because it's very strong. This was a very good week, but it's still a little weird. But first, before we go over the market, or review the market, I should say, let's go ahead and go over the one new long trade that I am taking on Monday. However, I'm going to work limit orders on this one. So EXE, natural gas name, is related to the AI data centers, infrastructure plays right now. Right now, that is my top theme focus. Biotechs are number one, medical number one, but really the AI data center play is really where I want to position into, and there's a lot of good names. We've taken some long positions this week. I'll actually go review some with you. Sienna went long Sienna. You can see the white arrow whenever I entered. FIX, and then a non data center play, but does rely on electric vehicles, RIVN. So we did take some trades. Some of those are working out. Last week, I gave you guys two trades, Jazz, which is working out, and then ONC, an immediate trigger, fill, and fail. Hey, that sucks, but that's trading. That being said, I've made it very clear that right now, there are times in the market where I am all in on every trade, 200% long. And if you give me a 2x ETF, I'll buy that 2x ETF with all of my margin, basically putting me 400% long a position. This market is not that kind of market right now, and we'll review. But let's get back to EXE. So, what I see here on EXE, a very well defined cup, follow the arrow, handle. So, we have a cup with handle trade. However, on this one, this was the start of the handle. So the high here is 120.31. You can see we attempted a breakout, squatted, heavier volume the day before, but still below average. Now we're breaking out again after a successful heavier volume 21 EMA retest. Probably should have gone long on this session here, but nothing was really standing out to me. And like I said, we had other trade candidates in the AI data center, so I passed on it, but looks like that was a mistake because now EXE is breaking out of that cup with handle. It is doing it on lighter volume, so that's why I'm not going to chase this price action. What I'm going to do is I'm going to work limit orders at 2 points, 1 cent above this high at 121.20, and then another half right around there at 120.31. So 120.31, I'll put a limit on the books. 121.20, I'll put a limit on the books. And we'll see if EXE can't fill. And I would want to risk to here, but you can use the 21 EMA. And we really want to see it hold the 21 EMA on this breakout attempt and then move higher. But you could, if you want to give it some room to work to the lows in this base. But EXE, you can see the relative strength line stayed above the 21 EMA relative strength line, or the 21 EMA of the relative strength line during the entire time that the stock was actually consolidating and pulling back. So this is a very high quality setup. Besides that, I really didn't flag anything in my stock list. LBRX is an IPO. This is a biotech name. Nice multi-day pocket pivot point signals going on here. Looks strong, but really wicky. I'm just not a fan of these kind of charts, so I'm going to pass on this one. Now, really what I want to talk about, since it is a holiday weekend, is really SPY and what we just saw the past week. So after this session here, it really looked like the market just wanted on Thursday, after Thursday session, just wanted to give everything up. I mean, things finally started to crack, like SNDK, MU. I mean, it just looked like it was finally time. Look at that reversal. Look at that big and bearish engulfing candle. This normally would lead to a pullback over days to weeks at a time. Probably take weeks to get back above this high. But now we'll go to the leading ETF right now, the IWM, and you can see within 2 days, retook that high. That's quite bullish. It's quite a reversal, which makes me think, hey, is this some kind of weird W bottom? Probably. Very well could be. However, we're not fully lined up there. We got a W bottom working here. But how I operate is that once we take out that big bearish engulfing candle, okay, I can start increasing size, risk back on. Now we get a follow through day in the IWM. We do not have a follow through day on any of the other ETFs as we actually get lower volume each day. And this one I wouldn't call a follow through day because we're not up 1% on the SPY, and we really haven't on the closing basis taken out the intraday high a day of this candle here. So no follow through day there. But we got one on the IWM. So once we took out this high in the IWM, was willing to re-increase size per long position. Once we got a follow through day, I have no problem if whatever capital I have available, if I have one new swing trade idea that day, putting it all into it. If I have two, splitting that capital up into two and putting it into those two names. But one thing that I'm not there yet is going on leverage, still not using margin or using leverage ETFs if a stock has that available. LRCX was a name that we went long, and I believe Sienna also. That's why you see the white triangles, by the way, because I'm long. Are two names that had leverage products. Now, I don't think Sienna did actually, now that I think about it, but I'm not sure because it doesn't matter because I'm not trading them. But if they did, if we were in a good follow through day market and everything was working, everything was lined up, definitely taking the leverage products in LRCX, but instead just doing the stock only. And really it just comes down to just the overall setup. The NAAIM went over 100. We happened to top out as soon as that happened. It has a history of whenever that exposure index hits over 100, we pull back. However, to be really bullish on that pullback, I like to see that number get down below 80 again. It hasn't, and it currently sits at 90. I also, once we start pulling back and start really selling off, I really like to see that IBD put call ratio get above 1 to really have conviction or confidence at a low. We didn't get this time around. And another thing with the VIX, I love that we're back below 20 on consecutive days and we're melting back down into that range. However, before you get a big outside gap up and a big reversal bar, outside gap up, reversal bar. We didn't get this time around, and we didn't even get the VIX over 30. So it's hard to have concrete conviction that we have a bona fide 100% low and we're only going up from here. It's still a mixed bag. We could easily, after this low volume V-shaped rally this week, see the market find resistance at these recent highs and roll back over. You just have to be prepared for everything. If there's anything in our favor, it's that the fear and greed index is still at extreme fear at 24. J and K and HYG are holding up relatively well. So we do have that going for us. Now I want to take a look at the toss charts, which I haven't looked at during a weekend video for a while. So with these toss charts, we have a tickets indicator, which is basically a byproduct of the MACD indicator that was created by our member tickets. And what I like to see is that whenever the tickets indicator is above zero and stair stepping above zero, buying breakouts and being really aggressive is great. Whenever it starts stair stepping down below or above the zero line, buying breakouts riskier, but buying those pullbacks to the 21 and 50 SMA, those are great. We are still currently under zero on the QQQ. We're still currently under zero on the SPY, IWM. So we're under zero still on a daily time frame. Now, when you are above zero on the daily time frame, and then you get down to the hourly time frame, anytime the hourly goes from below zero to above the zero line, you can be aggressive on that end. So once you have the daily below zero, you normally want to see the hourly get above. Let's just do I don't know where my 90 days is. We'll just use the 30 days just to keep it clean. You normally want to see the hourly get above the zero line first. Now, if the daily was above zero, once you get this cross, I'm all for being aggressive. But we just don't have that yet. But on the hourly, we at least are above the zero line on the IWM, SPY, and the QQQ. So we have retaken the zero line. But that being said, with the daily still below zero, you could easily have us find resistance at these old highs and roll back over. The lower volume, the V-shaped rally up every day, it's nice and it's a good slingshot, But previous slingshots, once they get back to the zero line, they can roll back over with that tickets indicator below zero. So as you can clearly see by just looking at the charts that I've shown you, we don't have everything going in our favor. If on the daily time frame we're above the zero line, if we have the hourly above the zero line, if we're above the momentum zero line here with this indicator, which we are currently not, you know, I can be much more aggressive and much more confident with a lot of conviction of behind the long signals. But right now, it's a mixed bag. There's a lot of potential ways this market can move. The rate cut based on the CME Fed watch is like, I think, at 89%. So we're going to get a Fed cut. I want to be bullish. I maintain a bullish bias. And one of the best things I think that we also saw with that, you had stocks like SanDisk start to break and they just didn't follow through. But they're not clear yet, and they won't be clear until they hit new highs. Micron, the same thing. So it's a mixed bag out there. It is bullish. It was a very bullish week, but I would just maintain optimistic caution moving forward. All right, everyone. Have a great rest of your weekend. We'll wrap it up there. Happy Thanksgiving to everyone.